Hi, this is Brandon Bischoff with Canterbury Investment Management, bringing you this week's Canterbury Market Update for the week of September the 16th, 2019. And we are currently in Market State 4 now, which is kind of a transitional bullish market state. And this sort of occurred because, we saw a spike in volatility back in August, and it's since then declined slightly, turning the volatility indicator transitional. The other indicators of Market State 4 are long-term positive, volatility is high but is decreasing, and short-term supply and demand is still negative. And so Market State 4 is one of the rare market states. Since 1950, there's only been 20 cases of having a Market State 4, and they happen a little less than 1% of the total trading days. So again, very rare. Canterbury Volatility Index measures CVI 79. That is still pretty high, so we are prone to seeing an outlier day or two, about 1.5%. We don't know when or if those will happen, but the probabilities are higher, especially because the market is currently sitting at a point of resistance, which brings us to our next point. The S&P 500 did rally back to a point of resistance, or where it began the month of August at. Currently, if we look at AIQ is a technical analysis program, and they are giving 91% of stocks as having an unconfirmed sell signal. So the market is a little bit overextended at this point. As we talked about last week, the NASDAQ was underperforming, and it kind of continued to underperform last week. So typically in a bull market, we would expect to see the NASDAQ show increasing relative strength. Well, its relative strength is still kind of flat to declining. We've also discussed in past updates that for most of this year, the Russell 2000, which measures small cap stocks, has been largely underperforming. Well, last week it kind of saw a little bit of boost in strength of the relative strength. So it did have some outperformance last week, but its volatility remains high at about CVI 102. So this is expected during kind of irrational markets with high volatility. You see sharp declines followed by sharp rallies, which is exactly what the Russell 2000 experienced. And it is now also currently sitting at a point of resistance as highlighted in this chart. Moving on to the Canterbury Portfolio Thermostat, we don't aim to compete against any individual benchmark because all benchmarks will go through both bull and bear markets. We want to maintain portfolio efficiency regardless of the market environment. So Canterbury's current portfolio efficiency measures 90, which is deemed to be efficient. Anything between 70 and 100 is considered an efficient portfolio. The portfolio state is bullish, the volatility is CVI 34, and the benefit of diversification is still at 56%. So currently the portfolio thermostat holds a combination of securities that are exhibiting, bull market characteristics, regardless of when the market was in a transitional environment. And it actually currently holds 3 inverse positions, which allows it to be, have a stable portfolio, regardless if the market is going to become a little bit more volatile. So again, bottom line, Market State 4 is pretty rare. Volatility has fallen slightly, but does remain high. 91% of stocks are giving AIQ unconfirmed sell signals. The NASDAQ continues to underperform, and the Russell 2000 still does have high volatility. Regardless of this, the portfolio thermostat remains efficient at an efficiency score of 90, with a higher benefit of diversification to help stabilize, and low volatility, which is a bullish characteristic. Thank you, and I hope you have a great week.